Hello, Warriors. Let's have a great week. Welcome to Face. How's everyone doing? Yeah. Don't you remember Ed Sullivan? Forex Skill. He used to say we're going to have a really great shoe today. Okay. I know you women, you love shoes. It doesn't mean go out and buy 20 pairs of heels. Okay. Good day for a good shoe. Well, we have Alba here as a guest. She's really been dead on with a lot of her calls. I'm calling her the queen of the wolf wave lair. She uses wolf waves. So stick around for that at the top of the hour. A couple of things I want to address here is, everyone see this false breakdown we had here? And we just had a little pullback last week. The 695 levels key, but we keep threatening a breakout here. So remember, all through the trade war blabber, I was saying this is your trade war currency. It's going to tell you if it's going to work or not. And actually, upon the completion of phase one, we had this false breakdown. So since then, all the good news, then we had, Corona starting. And to me, it looks like it's building up compression in here as long as we hold this 695 for what could be an important breakout. And everyone knows the implications of a weaker yuan, higher US dollar yuan. And usually it's not, a great climate for risk. So we'll see if they can put a wall up here and stop it, but looks like a bear flag to me. My major point was see this false breakdown as perhaps Canada is a foreshadowing of what can happen after a false breakdown, which is what you had here, okay? And on the weekly, even clearer, right? This false breakdown. So, same thing. Eventually it threatened, we got this breakout over 2.5. So perhaps a yuan is going to mimic the move that we had in USD CAD. I notice I have a little company on pattern and plays on the short side of yen. Blaker's got a lower target than Andre, and Andre has a higher stop. Any of you guys sign up over the weekend and learning to navigate your way around this? Okay, so, if I want to look at what everyone thinks about the yen. So you see right here, we have Blake and we have Andre. So two different methodologies, Andre using harmonics. So I'm wondering what Greg is saying. So Greg looks positive on it. It's green. So let's see what his count is. This is a 4-hour. So he's just saying sideways and then an upside move. So I could see that happening. My view on it is more like this. That this failing rally is going to lead to a 61.8% retrace of this whole rally. And I'm still predicating it on bonds, although it seems like the yen is trading more with S&Ps, but I'm still predicating it on new lows coming in yields. We'll see if they could get maybe a C wave here, but all we did here last week was fill this gap at a breakaway gap. So we'll see. And I also have something that you could pay attention to for a pivot in S&Ps. If you look at this blue line up here, okay, this was a previous high before we had a nice little break. So you have a nice pivot at, say, about 336. So while underneath it, I wouldn't be long, and you could be short. And then back above it, I wouldn't be short. You could be long for perhaps new highs. So these tops are hard to catch because, you know, you have no key reversal. Basically, you're just moving sideways. There's nothing impulsive about it. So it kind of lulls you to sleep. But see, there's even confluence on the 1 hour with some moving averages here too. So you may want to write down 335, 33, 35, 33, 36. You know, it's not cement, it's a mattress. So some of these pivots, you have to give it a little room. It's not one number, you know, where it hits it and it's cement. There's give in the area, probably of, you know, a handle or so. Everyone get that? That when you have a pivot, just like you have to give your stop losses tolerance over swing highs and swing lows, your pivot points, you have to give a little room above, below the number, and not always be looking for perfection. Looking at the S&P, what do we need for a reversal? So you guys know I'm a big believer in 2-week reversals. So this week, the S&P is really going to have to do a lot of work to the downside to give me a 2-week reversal. It's all the way down to 32.28. So anyway, you have an area to pay attention to on your scalping in S&Ps. And back under 3,300, I think that's going to be, you know, this was also an important number if you go back, the big round number at 3,300, see right here too. So that's another pivot back under 3,300, might seal it to take this out. I could also imagine, you know, something positive happening and getting one more push up to one more new high. But either way, if we're rolling over here or there's one more new high, I can't get long, and I'm mainly looking for shorting opportunities now. And I still think that part of the yield scenario is risk off, which we haven't had. And, you know, this has been pretty violent action, violence. So we'll see markets top with violence and bottom in silence. Okay. Oil, you know, was able to take a couple scalps out on the long side here. I'm looking for a new low. Okay. I'd like to see it flush out the low and see what kind of divergences we get. But, you know, I was tweeting about this. You know, the news cycle is so full of one crisis after another. Stop on short, 1580. I think it has to stop from there. But if I'm right about the yen, I still think there's a shot for new highs in gold, quote Tom. If I'm wrong about the yen, then, you know, then the gold is peaked. The yen is good. I don't think it's going to be bullish for gold. Okay. Not the yen is good, USD, yen, JPY. So I think we're going to get one more low. And I was tweeting, this news cycle is so vicious and ongoing, both domestically and geo, that it's like the incident with Iran and taking out their Revolutionary Guard leader and then a retaliation. It's like, oh, that's over. Now, you know, oh yeah, Trump said we're de-escalating, so that's the end of it. And I disagree because although we have short attention spans here, the Iranians have a memory as long as their history of Persia. So I think there could be something setting up. I know a lot of the long-term bulls are now talking last year's lows, 42 and then 33. But I think there might be something setting up here for, even if we are in a bear market, just retracements from this move, wherever the low comes in, I don't know why we can't see 56 again. So waiting for new loads and then RSI to give me a reason to click my mouse, not just the number. It's not the number for me. It's how it gets to a number and what it does around a number. So let's have a great week. If you haven't, I'm offering one free consult with you over Skype. If you sign up for at least a semi-annual plan, and I would do that over Skype. So after you sign up, let me know, and I'll add you on Skype, and we'll just talk about what some of your issues are. And it's not about trading ideas; it's about trading philosophy. What do you mean faster? Am I too slow this morning? Hey guys, am I molasses on Monday?
You might be just a little bit.
Yeah, am I? Okay.
Aren't we all?
Yeah.
All right. It's a slow market. It's a slow.
How you doing today, Blake? What's going on with you, man?
No, nothing much. Just, the euro and nothing much. It's actually it has been one of the more quiet sessions that we've had overnight. It looks like Greg is going to come join us today, so he's going to be in shortly, which will be nice. The FX market has been sleepy today. One of the big, I think, standouts for me is the cable. It closed at these lows down here, and we're bouncing this morning for no reason. I mean, other than we're bouncing. But the cable's holding up, and that's something that's kind of got my attention right now. The euro is absolutely comatose at the moment. The guys in my office are still talking about big euro issuance. So, rallies should be sold. But like I told you guys on the week ahead video, I'm not interested in selling down here. I'd be more interested in selling up here. But the question is, are we going to get a rally, towards trend line resistance? Like, are we going to, we might get a rally back to the breakdown point somewhere over here. I think that might be, logical. But I don't know if we're going to get a rally all the way up to 110 and change, where I'd be really hoping for the euro to trade up to. Like I said, I don't foresee that happening at that point in time, or at this point in time. The other thing is you got to look at the dollar yen. The dollar yen is struggling. I was going to sell it last night when it was trading in the 80s, like 85, 86, near its highs, and then I didn't do it. It was Sunday night, and I didn't want to wake up in the morning with a dollar yen shoved really far up my rear end. But I think the dollar yen is really struggling here at the 110 level. There's a lot of issuance, to be had up there. So I think that there's a lot of selling interest up there. So if for some reason the dollar yen can move back up into the 80s or 90s, I'll probably be willing to take another shot, because I've already got a piece of it. I just want more, So I was gonna sell some more up there, and I've got some from Friday, but it's not a very big position. Where I really want to be aggressive is below 109.50. This is the place, but I don't know if we're going to see that today necessarily. We do have some data. We have Canadian data coming out here in 1 second. Let me in just about a minute, actually. We have some Canadian housing data. Let's watch for that. Let me move this over here. Let me pull up the Canadian. I doubt it's going to be a market mover, but the dollar Canadian is pretty well bid still. Okay, so we have housing starts. Looks like we're expecting a little bit higher number than the previous data, but I doubt this is going to be the catalyst that drives the dollar Canadian through the major multi-year trend line resistance. I doubt it, but let's see here. Yeah. Housing starts at, yeah, they came in at 213. So it's, you know, not moving the needle at all, which we didn't expect for it to happen anyway. So, but the dollar Canadian isn't, it isn't even doing anything at this moment. It's just sitting there. All right. Let's take a real quick look at the dollar Mexican peso, because this currency pair, this is something that I was going to mention over the week ahead video, but I decided I'd save it for a for this face webinar. You know, we had a false breakdown last week, and that's something that we can't really ignore in the dollar Mexican peso. Given the fact that the dollar Mexican peso is a good risk on, risk off barometer, I think it's important to understand that we didn't strengthen last week as you would expect with the S&P at or near all-time highs. So I am really laser focused on the US dollar Mexican peso if it breaks above 19. I'm not so much worried about it here where we're currently at. But if you, here, let me grab my pen really quick. If you take this, you know, we have this false breakdown down here. Okay. You can see the false breakdown down there. All right. If we break through this resistance right here, which comes in around, let's call it 1885 roughly. Okay. This area that you see here between 1885 and 19 is going to be really important, because in the event that we break above 19, that's going to start squeezing. That would also happen to have to happen with a
risk off move.
A risk off move. Yeah, I'd want to see that, you know.
You know, Blake, it's interesting. First Canada did it.
What's
false
that?
First Canada USD CAD did it with the false breakdown, which
Yes.
you say is you know, risk aversion. It goes up.
Yeah.
Then USD Yuan has done it, and now the peso. It's like they're all lining up, all these risk off currency moves.
Everything's lining up, starting to line up in the FX market to signal that there might be some risk off. We haven't seen it yet in equities.
Right.
You know, but let's also point out, which, you know, I did on the week ahead video, that we did have a false breakout in the S&P. Now there's been no downside follow through. You know, I don't know if we're going to get it today, but this false breakout that we saw in the S&P,
and then a 35
breakdown in the, what's that?
Was that a 33, 35 about?
Yeah, it was the 33, 35 level roughly.
Okay,
yeah,
thanks.
That's correct. And you know, here's the thing, Dale. The S&P, and one of the reasons why we're not seeing a sell-off right now is that, and I was talking to the guys in our office about this, is that we have all the news flow that we get from China it is managed. And if you don't believe that, I think you're, you know, you're probably being a little naive here. You know, the news flow that we're getting about the coronavirus, it's all China covering up what will be the real numbers. The realistic expectation is that we'll never see the real numbers. We'll never see, whether you think, oh my God, there's 1 million people, you know, infected, and, you know, 50,000 are dead and they're just throwing bodies in the sea, or, you know, whatever you guys, you know, believe. You know, I just don't believe that the numbers are real. I don't believe that these numbers are real, but it is all managed to a point where we will never see access of it. And the only news that we're going to end up getting regarding the coronavirus, unless it really starts to extend itself past the China borders, is that when things start to improve, you know, we will hear about that. And so, you know, the unfortunate thing is, you know, between now and, let's call it May, you know, when the temperatures rise and it, you know, will end up killing off the virus anyway, there's probably going to be a fairly large death toll in Asia. We'll just never know what the real numbers are. And like I said, unless things progressively get worse outside of its borders, which, you know, I'm skeptical that it really is. I just think that, but, you know, we'll have to see how it affects. We're going to have to really monitor how it affects like different supply chains for U.S. based companies, European based companies. From what I understand, the Wuhan province is very automotive heavy. So how it affects the European numbers, especially like, you know, car, automobile parts in the coming months is probably going to be fairly important. But, you know, China's struggling to get back to work. They're trying to get their factories restarted. I do think it's going to have a bit of a negative effect on global GDP in moving forward. And I think until we start to see those numbers realize a little bit, the downside that we see in equities is probably going to be fairly minimal. But that doesn't mean that we won't see some downside here. And so like with the S&P, for example, I will be monitoring. Let me go ahead and draw this out for you guys. I'm going to be monitoring right around here in the S&P, right around the 3,000 level, because we already got the false breakout, right? So we got the false breakout, and really a false breakout should lead to a breakdown, okay? But until I see it, I'm not going to get too terribly excited about the prospects of that. At least not yet. Okay. But like I said, in the FX market, we are starting to see signals that could lead us to believe that we might have some risk off. The other thing is, you know, and I know I just talked about it, but I'll mention it again. The US dollar Japanese yen below 109.50. This is where I start thinking, okay, things might get a little rocky moving forward. You know, the dollar Mexican peso above 19. You know, that's another like, you know, feather in the cap for you know, equity market bears, if you will. You know, the dollar Canadian, if we break out above 133, let's call it, well, the highs over here are like 20, like these highs right here, okay, are in the 20s, but really we have to clear like 133.30, and then that would also, you know, signal to me that that we might see a break higher in the dollar Canadian, and then also a you know, a bit of a risk off move. And by the way, the dollar Canadian, the DSI numbers are getting a little stretched. You know, they're getting a little low, very bearish sentiment, but also at the same time, this is a pretty big, you know, technical development. From a big false breakdown to a possible breakout, we could squeeze to 135, 136 in the dollar Canadian before you see some of that sentiment erode, you know, on the other side. So we could really break out and spike up, and then I would be looking for any type of near-term pullback for an opportunity to be long dollar CAD, Aussie CAD, you know, short Canadian yen, long Euro CAD, things like that. But that's, you know, kind of what I'm viewing at the moment. Also one of the other things, I'm gonna bring this up before Steve and Stelios get here, and I want to give time for Grega to speak as well. I know we're all watching, you know, like gold. Gold isn't selling off. We're challenging the underside of this broken channel, but look at silver. You know, I know I blogged about it the other day. It was our you know, chart of the day. I mean, silver has not backed off at all, and that's something that has to be recognized, because silver, if silver starts blasting higher and gold hasn't, well, that's a pretty good sign that precious metals are going to continue higher. Whenever silver outpaces gold, that's a, generally speaking, bullish precious metals move. So the silver market, I think we should keep an eye on it, especially if we breach like 18. I think that's going to be a pretty big break higher. Then, you know, then at that point I'll be looking at this, you know, I'll be looking at this, 1850, and then above that it starts getting, pretty bullish. But anyway, just again, a few things that I'm looking at, especially a really, really quiet day in the FX market. I was telling the folks in the chat room, if you're a ForexAnalytix subscriber and you want to chat with me throughout the course of the day, you'll find me right in our chat room, which is, it looks like this. You can see us in here, and there's Amanda chatting. You can see we've been talking for hours now. Just hours and hours and hours, or anyway. But I was telling everybody in the chat room that I went to go update a bunch of our charts on ForexAnalytix on some of the basic technical analysis, and you can see like our live stream with the updates and everything else. There was very little for me to update because the market has been so quiet, and so I'm not typically, or I'm not very very excited about much at the moment. But you could also look at it as a possible quiet before the storm, if you will. So anyway, guys, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, so try it out, and make sure you download the mobile app when you do so, right there. And remember, you get the premium version when you're trying it out, so it's worth a shot. All right, well, Dale, Steve, Stelios, I want to pass it over to you because I want to give you plenty of time to talk before Greg gets here. So good morning.
Good morning.
Good morning.
Good morning.
Hello.
Happy Monday. It's quiet.
Yeah.
Happy Monday.
Yeah.
Always happy.
Monday. Yep.
Okay. Thank you very much, Blake.
All right, guys. Hey, have a great one, and I'll see you on the daily roundup webinar in about 4 hours from now. So remember, that's like a little recap as we go into the Asian end of North America Asian trade. Make sure you join me there, and sign up for that. So this way you get reminders every day. I'm there for Monday through Thursday. Excuse me. All right, guys.
Thank you very much, Blake.
Blake pulling
pulling
a double shift, walking the talk. Good luck today, buddy.
All right. Hey, guys.
Hey,
so we had a relatively quiet weekend. Main story still coronavirus. It's now surpassed the number of deaths from SARS, and it's still pretty much galloping on. So let's see where it stops. Data-wise, we had a couple of interesting things. Norway inflation surprised to the upside by quite a bit. Came at 1.8% year on year, was expected 1.2%. So the recent drop in inflation seems to be stabilizing, or at least seems to be. Italian industrial production, minus 4.3% year on year, expected roughly flat. So yeah, Italy, Germany, France, it's really not looking very good for European economic data at the moment. And to add to this on the euro side, we have Angela Merkel is stepping down. She said this some time ago, but it seems that her successor, who's going to succeed her, Annegret Kramp-Karrenbauer or something, she's announced that she's stepping down as the leader of the CDU. So that's there was a vote recently in an former East German region, and there were some developments. Basically, she's stepping down. So now we have all sorts of uncertainties coming up because we now don't know who's going to be replacing her. So just another little piece of uncertainty, which the market definitely does not like. So I don't see anything that makes me really like the euro at the moment, apart from the fact that it's at zero rates and it's a very nice funding currency. In terms of news, we didn't have economic data. We didn't have much else. Yeah, I'm trying to find something else. Oh yeah, I mean, there was also on Friday, there was a rumor about OPEC getting together and cutting production more, but it seems that this is not happening as the Russians are not accepting this. So the next OPEC meeting, I think, is in March. It was supposed, there was a rumor it might be brought forward for this to take effect, but it's not. So oil as well is going to be trading on the back foot on the back of this, and coronavirus is not helping, is it? So, you know, global activity is reducing everywhere. It's not just you know, auto manufacturers, everybody. You know, supply chain is being severely disrupted by what's happening in China. I have a friend who's actually a chief mechanic in a ship, and he was traveling close to China recently.
By the way, sorry to interrupt.
Yeah.
We got very good, for a change, Canadian data having to do with building permits, 7.4 versus 2.3. That was expected. So I'm gonna switch to USD CAD to have a look at it as you speak.
Thank you. But I was going to say that I have this friend who's saying, look, no
and USD CAD couldn't care less, by the way.
Yeah. No ships are going into or out of China. You know, this is going to disrupt massively, even though the effects are not felt yet, but they're going to be felt over the coming months. But equities obviously don't care. They just keep rallying. So buy stocks, end of story.
Yeah.
Yeah, that's it. I don't have that much else to say. It's been a pretty quiet day, pretty quiet morning as well. So
yeah, the disconnect between reality and stocks has really turned to epic proportions, because literally stocks have now been effectively ignoring everything in the hope that, you know, monetary stimulation and monetary policy and, you know, fiscal expansion in some cases can really solve any type of a problem.
Yeah, no, I agree with you.
Okay, by the way, still, as you see, USD CAD is looking quite bullish. I mean, even some positive data can't really, you know, turn it down even like 10 pips. So I'm really paying close attention to this formation. I think that above it, you know, USD CAD is going to probably explode higher. Okay, so did we cover everything?
Well, everything I had to say, yeah. Not much else.
Perfect. Let me have a look. In participants, let's see if Gregor is already here. Here he is. Okay. I'm promoting you, Gregor. There you go. And I'm muting you. Hey, mate.
Hey.
Hey, how have you been?
What's up? How are you?
Good, mate. How have you been?
Well, we have some crazy weather here for the last few days. I mean, there are winds more than 100 kilometers per hour, and it's really crazy. Not kind of weather you would expect in our...
Really? We during the past week, we've had mostly spring weather here, actually.
Really?
Yeah.
Definitely strange weather the last few years.
Move to Greece.
Yeah. You should,
okay.
Yes.
So what do you have for us? I know you actually people were asking for you because, you know, you haven't been with us for the last couple of weeks on the webinar. So I'm pretty sure that people are really looking forward to seeing what you think is about to happen from here. I know that, you know, several staff have been testing critical support resistances. For example, I just mentioned USD CAD, which looks to me quite bullish if we break out from this formation. I mean, this latest move that started at the end of 2018, I don't know, but it looks corrective to me. We also have, like, you know, a potential big breakdown in crude. I see consolidations in the metals with the potential of higher prices. Yes, stocks have been completely unfazed by everything, and they keep pushing to new highs. So I'm really looking forward to seeing, you know, what do you think about all of that?
Well, what I would like to firstly mention is
grab the screen. By the way, let me stop sharing so you can grab it.
Okay. So firstly, what I would look for and paying attention is probably the 10-year US notes, or maybe even better to look at the yields here. And we can see that there was a very nice move to the downside, right? So I'm thinking that this, despite stocks moving to a new high, we haven't seen note prices pulling back too much. Okay, so in my opinion, this is still a fifth wave ongoing that will take us back to the highs. So what I think is going to happen is that the S&P 500 is still going to search for a resistance at new all-time highs as soon as this market progresses higher into a fifth wave. Okay, so
I'm totally with you, having to do with the direction of the yields and treasuries. We were actually pinpointing that with Dale. I mean, textbook corrective moves in yields, but it's amazing. I was also showing last week the disconnect, as you said, between yields and stocks. So yeah, at some point something has to give.
Yes, but stocks now recovered back to the highs, right?
Yeah, indeed.
Yes, but that happened at the same time when the 10-year US note made this small correction.
Yeah, but I mean, while the bonds were moving from the bottom of wave 4 to where they currently are, stocks didn't care at all, right? I mean,
yes, in general, yes, of course.
Yeah.
But there are still cycles that are very similar. Okay, so they are not moves or legs are not making same extensions, with same distance. For example, you will see just a small correction on the 10-year US notes, and you will see just during the same period an explosion higher on stocks. So what I think is going to happen is when we reach or reverse back to the upside for a fifth wave, which I would not be surprised if we consider that recently we have seen a filled gap here from end of January. So maybe we are already building the first stage of this further upside from here when we are breaking this trend line. So in my opinion, the S&P 500 can be looking for a top at the same time. So if I take
which upside targets do you think that can actually turn, for example, let's take the benchmark S&P lower once yields start moving even lower or bonds start moving even higher? So which is your upside resistance that you would like?
I have here these two Fib levels that I'm paying attention on. The first one is this 261.8% extension of this red wave one. Okay, and the second one is the 38.2% extension of this third wave. So these are typical targets for a fifth wave. And looks like that there is still some room for more upside, especially if we consider that in this fifth wave, there is no 5 subwaves yet.
Yeah, so and this last move indeed looks corrective to me. This one that you have.
Definitely. Yeah. Yes. So I really think we should remain bullish here, and looks like that maybe the 10-year US notes will consolidate now for that fourth wave. I didn't show you this chart, the 4-hour chart that I'm looking at here. Okay, so here I'm looking for this wave 4. Maybe we get another retest. Maybe it was already finished here, but I'm expecting this resumption higher. And when this happens, I think that stocks will actually turn back to the downside, but again, only for just another correction. Nothing
with downside targets in that case being in which area?
For the S&P?
Yes. For example, for the S&P.
Yes, here, obviously at the area of the former fourth waves. There was fourth wave of 2 smaller degrees, and then you had this fourth wave recently completed, and obviously I would be looking for next wave 4 to come back into this same similar region. What I also see is I'm looking for some Japanese yen crosses, and I see, for example, like CAD yen still acting very nicely and having a very beautiful bearish structure. So
I would argue that the same applies to Aussie yen and Kiwi yen. They also look quite bearish to me.
So I think that maybe I'm definitely focused on those pairs. If I will see the S&P 500 making a top in this area, so if we see a slowdown here, then definitely I would be looking for potential shorts on one of those crosses. Now, if we take a look on CAD yen, here is firstly the most important chart. The guide for my potential shorts is this broken trendline support. So it looks like that we completed this complex correction and that we are headed even lower after this current corrective rise will be done. And what I'm looking at here on the 4-hour is actually very nice, beautiful 5-wave fall, and then you had a wave A, you have now wave B. I would be looking for a wave C to move back into this, maybe just first resistance at 83. There you have also a small gap, which wasn't filled completely yet from January 24th. Okay, and then you have...
Yeah, I agree with you. I have resistances in the zone between 83.20 and 83.50. I like that area.
Yes, that's
you know,
a very
as a selling
beautiful
area.
Region, actually. So my idea, potential approach to this trade is for S&P 500 to move to a new high, to make that fifth wave that is still missing, because as you said yourself, latest pullback is looking corrective.
Yeah, it is.
At the same time, maybe we'll see CAD yen making this wave C to the upside, and then they will both move together to the downside in risk-off mode. But I want to see S&P 500 set to maybe to stop at that upper fib levels for a fifth wave.
Speaking of which, indirectly, you opened up two subjects, which I know that a lot of people have found a very, very tough time trading those two. First of all, what do you think about USD yen? Because USD yen has also been showing disconnect on occasion, both with risk and sometimes with yields. I mean, it's not following as closely as it used to, neither of the two. And we have like a multi-year trend line resistance just above us. What do you think is going to happen from here?
I think that, as we said, yields are moving to the downside into fifth wave, or bonds higher into this wave 5. So I think that when these moves will progress on treasuries, I really think that dollar yen will again face some resistance. And what I'm looking at here on an updated wave count here is that I would expect a test of these January levels. Ideally, we will see a spike higher and then a reversal lower. I still cannot count this as an impulse, meaning that I would expect something aggressively or strongly to the upside. I still think that there will be a failure break at the highs. And after all, this failure breakout at the highs occurred each month since September, October. So I would not be surprised if we get something similar now again when we approach these highs. So to put everything in the same context, of course, I would expect 10-year US notes to continue higher. I would expect that S&P 500 and dollar yen will both make us maybe very similar tops here, but dollar yen still ready to push these prices above January 15 before we reverse to the south. And
a more medium-term downside target for USD yen, if it fails here, what would it be for you? I mean, not in the very short term.
It's really hard to say where I will look then, because we still don't see a top formation.
Mm-hmm. I agree,
but I would be expecting at least a drop towards this lower side of this trading channel. That would be my minimum.
Okay, so you would expect this whole move higher to probably completely be retraced?
To be retraced, yes, exactly.
Okay,
because I'm expecting another risk-off cycle.
Okay. I'm with you so far. I mean, we have really no disagreements. Now, the other key question, what do you think about the DXY? I mean, a lot of people are getting super enthusiastic with the latest move of Euro USD to the downside and DXY breaking to the upside. And I have to admit that, in the short term, DXY looks bullish, but once again, we don't have impulsive moves in either direction for the DXY. So how far do you think the DXY can actually keep on going to the upside with this lack of momentum we've been seeing?
Well, I'm looking at some potential resistance up here. I still think that we either will just stay sideways. I mean, we must admit that this is very ugly price action.
It is right? Horrible.
Yeah, so in those situations, we can make plenty of different wave counts, which is not helpful actually.
Yeah, that's why I keep telling people, trade something else.
Yeah,
I mean, don't try to trade Euro USD. I mean, there are other things out there, really.
So what I'm looking at here still from an Elliott wave perspective, why I think that there may be another swing to the downside, maybe not for a wave C all the way towards 96. Maybe they will be just limited downside levels. But the reason why I'm looking for this is because there is an idea that this first drop unfolded as a leading diagonal, because there was a 5-wave move actually. Wave 1, 2, 3, 4, 5.
4, 5, yeah.
Yes, and this could be a very sharp wave B. So I know it's a very tough call, but if we are starting to reversing to the downside, and more importantly, if we start falling back into this zone right there, then I would say that wave B is finished. And why this zone is important? Because if someone will try to count this as a wave 1, 2, and another wave 1, 2, and you're now in a wave 3, well, then a pullback of upcoming fourth wave should not retrace into this area.
Yeah,
so
it should be sharp, yeah.
Yeah, so if we start falling back below 98, then I really think that this could be part of some new, maybe even a wave C drop on the way.
If that proves to be the case, that could also be a leading diagonal in a new impulse to the downside, right? I mean, it can be a correction, of course.
Yes, of course. I would go with discount if we will start falling very dramatically and with an extended
if we gain momentum in that move, yeah.
Yes, exactly. So at the same time, you also can look here. What is it right now? Let me just hide this. As a potential head and shoulders, if someone would want to be very bearish here.
Now, one reason why you can get a very impulsive move to the downside is the logic that our friend here, FX Trader, is displaying, Gregor, which he says, Euro USD is the easiest pair to trade. Just sell every uptick so you can understand what's going to happen when finally dollar moves lower. The sell every uptick, people are going to be running for the door all at the same time, and the door is going to be so small.
Exactly, yes, because it would be just too aggressive for traders to look to the downside. The opposite happens. So since you mentioned the euro dollar, I can take a look on this one.
Euro dollar is like 70% the inverse of the DXY.
Yeah, exactly. So, but still, what I see here is potential flat correction. Okay, this is wave A. You have now flat for a wave B. Now, try to ignore this wave C that I'm primarily expecting. It's towards a 1.3, maybe even a 1.13, maybe even higher. But we can see this 5-wave drop here. Okay, so even 5-wave drop suggests a 3-wave correction minimum. So again, this chart suggests to me that we could see
at the very least some rebound. Yeah, at the very least. Yeah.
Yeah. So we will see how this unfolds. Definitely, I'm not trading euro dollar. I'm not fan of it for.
Yeah, it's abysmal. It's
for abysmal. The last 6 months, if not more. I'm sure that there are much better setups out there than.
Last week I showed to everybody that the euro USD is in a downtrend, right? But if you had been short for 1.5 years, consecutively, you would have made 7.5% for being in a position for 1.5 years. Really, is that the best way you want to invest your money?
Yes, and despite that, you would probably give up on
that short squeeze. You would have probably given up and not even get the 7.5%. Yeah,
yes, exactly. So, euro dollar is very tricky. Maybe I'm wrong with my wave count here for a wave B rise. Maybe we already finished and put a top in here. So that's why I have alternate, because I realized that that's possible. But still, what would have to happen for me to look on the euro dollar is that we get a decline towards 1.06 level in a week or so. So that you have something very strong and sharp, so you can work with potential setups on pullbacks on the short side, because otherwise I just think that this price action is useless, actually, because you don't have stable direction at all.
Yeah, there is nothing to add about the Euro USD. Really, it would be the last thing I would be trading out there. The last thing.
Yes, we are spending too much on euro dollar.
Yeah, exactly. Yeah, I'm not going to be trading it unless I see something very, very different. I'm not even interested, really.
Yeah, so maybe Aussie's for example, much better.
Also, by the way, testing multi-year lows once again. What do you think about it? Is it really going to break down even further?
I think that is breaking down, but we have to realize here, I'm looking for potential ending diagonal to be unfolding here. And the reason why I'm looking at it is not only because it's possible, maybe it's not the best wave count at this stage, but I really doubt that we will see a drop into wave 3. Okay, so what I'm thinking is that maybe I just want to be more guy with minimum objectives, and that's why I'm looking for wave C, and that's why I came out with an ending.
Yeah, so you're not excluding like an impulsive move to the downside, but you're taking it more conservatively, and we see what happens.
Exactly. So I'm looking for this maybe for this move towards 0.65 or so, for this impulse to extend. So even if I have this wave count, it's still, we need to have and not that aggressive bearish wave count. I still need to have 5 subwaves here. Okay, so looking at the 4-hour chart, well, this is something tradable. Okay, you want to look maybe for, if you're an intraday trader, you want to look in the direction of bearish trend here on a daily chart. You have a bearish trend on a weekly chart. So looking at the 4-hour charts, I think that this one could give you much better entries on pullbacks. So what I'm looking at here is a wave 1, you have a wave 2, you have wave 3 here that maybe will
finishing up likely,
yes,
soon
in the next 2 days maybe, and then you watch out for a new 4th wave. Even this 4th wave again found the resistance at the previous 4th wave. Okay, this was a very small one here. It's 1, 2, 3, 4, 5, and the same time this, you can see also this horizontal resistance that goes all the way back to this wave B breakout.
Yeah.
So I think that this is a very interesting pair. If we get a 3-wave rise back into this area here, I think it can be a new opportunity to catch the downside. Because after all, we are in a bearish trend on each degree of a trend here on Aussie. So I think
Kiwi is also looking quite sick. I mean,
yes, Kiwi is having a very similar structure, as you said. Here we have also an impulse in progress. But again, maybe you just should wait on this bounce, on the next bounce, rather than shorting here at the lows, because I think that you want to get in at better prices, I'm sure.
What do you think about the metals? Both of them seem to be consolidating. I would expect more highs. I mean, I see a triangle in gold.
No,
I see a pennant in...
Yes, if you recall, I was looking for a reversal to the downside. I said that, I also made that blog post where it said that we are in either in a wave B or wave 2, but we expect a minimum 3rd leg drop, either as a wave C or wave 3. And what has happened here is actually we have seen a very nice reversal to the downside. And this reversal looks quite sharp, and it can be counted in 5 waves on a smaller time frame. Okay, so maybe we are still going to see weakness here. Also, what I see right now is price moving into this potential trend line resistance that was broken. You are also at a 61.8%. So I know that this is very strong call to look for a wave 3 to the downside, but I have also here alternate count, which suggests that whole price action is a triangle. Maybe it's that's even better idea, because after all, we are moving with price only to the right rather than to the downside.
Yeah, to the downside, yes.
Yes, so that's why I also have this wave count. But what is important that even this suggests we will see a reversal lower, because
small pullback before we explode higher. Actually, the way I'm looking at it is what you have as an alternative count there.
There on the right.
Yes.
And that ties in, guys. And that ties in with everything else you talked about, Grega.
He's right, because that would tie in Grega with some
break in the yen, everything.
Yeah.
Yes.
See, Steve? I interrupt your interviews.
So yeah, he's 100% right, because think about it, Grega. We might see that E wave lower when we have that 5th wave up in the S&P that you were showing, and at the same time a little bit of upside to the USD yen, and at the same time further more consolidation in the yields. And then when risk turns lower, we might see that breakout having finished wave E, and then seeing one more high in the precious metals. Huh?
Yes, could be. But what I want to warn with those two charts is that we are still going to see this swing to the downside. So the only question is how
big
and
yeah.
what kind of
big.
structure will unfold within this drop. Now, if you look at hourly chart, okay, because wave 2 is a corrective flag, wave D is a corrective flag, right?
Yes.
So I think that we will see a reversal, because looking at the hourly, you can count actually maybe 7 swings in progress here. You have first swing, second, third, fourth, fifth, sixth, and a seventh swing is coming a little bit higher. Maybe we are now here making some kind of a triangle here in a wave B.
Gregor, I think we can make it very simple with people. Those that believe that metals are going to move higher, if that means that, you know, they believe in the triangle interpretation in gold, which means that as long as we stay below the previous low, above the previous low at 1547, you know, you can keep being bullish, right?
Yes, but realize that you may not see price breaking higher from here.
Yeah.
But maybe from a pullback, because I can see very nice resistance. Actually, this based on a technical elliott wave chart on this hourly time frame, 1579. You have second zigzag equals to the first zigzag, also at this resistance. Mm-hmm. You have the price action moving within these trading channels, which is normally personality of a correction. You have this current rise looking much more overlapping than the previous decline. So definitely be aware of a reversal. But as I said, if that would be a wave E, watch out maybe just for a drop towards 1560 and then maybe see more upside.
Yeah.
Just be aware of reversals, pullbacks.
And what is, I'm assuming that you have the two interpretations in silver as well. Silver, if you're asking me, looks even more clearly corrective than gold does at the moment. So I'm still expecting a higher prices for silver.
Silver, yes. Here's a little bit tricky, but I will make it simple for you. So the reason why I have this slab, this wave count, is because this rise here can be counted in 5 waves. Okay, but so far we don't have a progression to the upside that would actually confirm this scenario. We are still trapped below this upper trend line resistance. But if we are trying to see, if we'll try to see and form a breakout here, then I really think that this would be the case. And at the same time, then gold would also be in a triangle, probably as you said yourself, and would be looking for a break higher into a 5th wave. The other interpretation is that this whole
move is a flat, from what I say on the left side. I mean, you expect.
I mean on the 4-hour chart still.
Okay.
The second interpretation would be that this is actually
a B,
a triangle,
a triangle B, right?
Yes, and you expect a drop,
and then one more move lower. Yeah.
So for now, both markets, metal and silver. Sorry, gold and silver are trapped in consolidation, and I just think that it's too soon to look for a breakout because they are not forming yet.
What about crude? Crude actually is in the precipice of a big breakdown if it moves lower from here. What do you think about it?
Just a second.
I mean, I had like multiple areas of support between 60.5 and 61.5. And we've actually sliced through that. So, you know, it doesn't look good to me. And especially if you're expecting risk off to, in essence,
yes,
come soon, I can't see any scenario that that crude is going to be doing good. You know what I mean?
Yes, I mean, crude oil is definitely, you know what worries me about the crude and potential bounce, at least in the short term, is that we moved here to a new swing low, okay, and found some very interesting support here, and even trying to recover above this wave 2, wave 4 trend line. Okay, so I'm wondering if maybe, even if it's crude, very bearish and will continue much lower, at least ABC pullback can now be unfolding back towards maybe.
Yeah, I'm with you. I mean, I'm in the short term, it makes no sense selling down here, but I'm talking about the general direction. It looks very heavy to me.
Yes, it does. Yes, but now when it comes to Elliott wave, how would you interpret that? You know, this is the first leg, and then you had and now you have a pullback. And I cannot say that wave B has ended here because we haven't moved to a new extreme.
Yeah.
Okay. And you have here from April highs, you still have only 3 legs down.
Yeah.
So, I mean, it's a very tricky count, and that's why maybe we are still going to stay trapped in this consolidation for a while.
Yeah, that would imply, though, I mean, if that was what would happen with crude, if there is not an internal and intrinsic reason that only affects crude, that would imply rather a period of risk on, you know, quite a strong one. You know, unless
crude oil, which is very weak, would recover.
Yeah, unless there is something that specifically will disrupt crude oil supply, you know what I mean, and you know, affect its price,
like some new explosion or something.
Yeah, whatever. Yeah. I don't know.
Iran.
Yeah.
Yes, that could impact only crude oil. Yes, like it happened, I think, here.
On a few spikes, yeah.
Yeah.
January, and also here.
Yeah.
What happened here in September? It was also something.
Yeah, and you had risk off for a little while during those spikes.
Yes.
Well, God, what a segue I have here from Elliott wave to Wolf wave. You know about Wolf waves, Grega? Ever hear of them?
Oh.
Wolf waves.
They sound dangerous.
WOLF with an E.
Yeah.
Anyway, the queen of wolf waves is here with us. Alba's with us. Grega, you know, thank you for crystallizing things for Steve and everyone here watching, and we'll see the replay. So,
okay.
Thank you, Grega.
Thank you.
As always, nice having you with us.
Yeah, thank you, Wizard.
Okay, bye-bye.
Okay.
Needless to say that if you want to
team.
have Grega's analysis on a daily basis,
yeah,
you know where to find that.
Yep. Where?
Let me guess.
Maybe help everyone figure it out, man.
Yeah, indeed.
All right.
So, Coach, is your guest here?
Yes, we're going to move ahead.
Okay. Perfect. So I'm going to stay with you until you,
okay, thank you,
have
Steve.
everything working.
Okay, Alba, we're going to get you set up. Welcome back to Face. Looking forward to seeing what's on your radar. And you're now unmuted. You're unmuted. How are you, Alba?
Make sure you've selected
from
the audio. Yeah, now we can hear you. Yeah.
Got you.
Okay.
Welcome back.
Greg, if you want to stop sharing your screen, because
I cannot share my screen. It says because somebody else is
sharing. Yeah.
But
there you go.
Can.
Try again now. Okay,
I'm going to share my screen.
Beautiful. Here
we go. Do you hear me clearly?
Yeah, we can hear you, and we can see your chart. So, how do you like your new nickname?
My nickname? My new nickname.
Queen, Queen. Queen of the Wolf Wave.
I think it's a little bit ambitious.
Yeah.
Okay if you want to call me like that.
Oh, come on. You're our queen of Wolf Wave. So at the minimum, you're ours. So, you know, it's great to have you back, Alba. You know, normally when you and I get together, there's some type of, you know, turning point about to happen. Yeah. So tell us what you're seeing.
Okay. I have prepared here first of all your indexes. This is the S&P, and then we will see the Dow Jones.
Okay.
And I want to make a top-down analysis beginning in weekly, because I don't know if you remember the last time we talked, or the previous one, I don't remember which one. We talked about a pattern which is called bump and run reversal, which is found only in higher charts, in daily, weekly, and monthly. And we work bump and run reversal in daily. And now it has developed this figure in weekly. This figure is a reversal pattern. and it forms after excessive speculation drives price up too far and too fast. Okay, yep. So we have to wait for the breakout of this trend line. Okay, it's formed by two trend lines, and the key in this figure, in this pattern, are the degrees of these two lines. The first line is called the leading, and it has to have between 30 to 45 degrees. You have a tool in MetaTrader, at least, that you can.
Okay, so you were eyeballing it, and it was still 40. You had it close to 45. How do you select the points? Because you know that line goes through some action, and they're not just wicks. How do you choose where to anchor a line like that? All of your lines.
I follow the price when it closes.
Yeah.
The bodies of the candle. Someone took the finish of the shadows, but I take the bodies of the candles.
Okay.
So I join them more or less like that.
Okay.
And the same here.
Okay.
And I have a figure here, which is the bump and run reversal, what I'm talking about. If you see it, just check this bounce here when it
interesting.
It tries to break it and then goes up. So I think it is happening here like this. You see in daily better. Now we'll go daily like this one. Okay, this bounce. And now I'm expecting it to make lower highs below 3,362, lower highs below that point.
So any pop this week, if we made new highs, would invalidate this?
Yes. Here there is, well, the resistance or the previous highs.
Right. 33, 35 about.
If somebody is going long, I'm not comfortable buying now. But if somebody is going long, I will wait for the breakout and then to bounce here, to test the price, the breakout, and then bounce to buy. Now it's not, I'm not comfortable with shorts. Shorts are risky, but even less with longs because we have a very divergence here in daily right now.
Yeah.
With the other oscillators.
Glaring.
And I'm waiting, and I'm waiting for that lower high, for some pattern to have the trigger to enter short. And right now I don't have it, but we have all the patterns, all the exhausting figures form, and now just the price rules. So
okay, so do you need a breakdown before you can plot your wolf waves?
Yes.
Okay.
For example, this one is the exponential moving average in 4 hours, which conclude normally with a simple moving average 200 in 1 hour.
Okay.
And it has bounced in this moving average. So at least I need to break it down to be more comfortable with shorts. I can combine it with Fibonacci, but I don't like it a lot because it's, I don't have any burst pattern of candles. So I'm waiting for this area to break the prices, to open shorts and be more comfortable with shorts, because right now we don't have any burst pattern to have a trigger, you know, to
right.
Shorts.
Okay. So you still need confirmation of this.
Yes.
And you would get it under that. You'd get it under the low. I believe that low was, when was it? Friday? Yeah.
Mm-hmm.
Okay. Got it.
But in Dow Jones, the patterns are very similar in weekly and so, but the only wolf wave, the various wolf wave we have, is in Dow Jones index in daily and 4 hours. But this area is very important. And I need the price to go below this point, 0.5. This is 1, 2, 3, 4, 5, 5 points. The walkways are composed by 5 points. 0.5 is the maximum, and the price shouldn't overpass this point. I was stopped out here, and then I entered again. But this area is the key. It has to break this moving average. It's the 50 moving average in daily. And once it breaks or makes, again, lower high below 29,000, I think it's good to try risky shorts,
Okay.
A great risk-reward relationship, but they are risky right now. So.
Okay.
And I want to see some Forex, some pairs. First of all, I want to use the yen because it goes more with the indexes, the two indexes, your indexes, Wall Street.
Right.
And in weekly, it has this figure, this triangle, and this very straight line.
Descending triangle.
Yeah, that it's not overpassing, it's rejecting it again. And now if we open daily chart, it's a kind of, I don't know, it's consolidation over here, like a resistance. I'm looking again to open shorts if the price goes below the 50 moving average in daily for USD.
Where's the 50 come in?
Here.
Price-wise.
109.20.
109.20.
Any lower high. Yeah, any lower high over here. You see this resistance?
Yes.
It's born from the 0.5 of this wolf wave.
Right.
And it has the price has respected.
Yeah, it had a false breakout.
Yeah, it's a bullish trap.
Yeah.
And then the price went down, and now it's now rejected. It's not overpassing. So this is my view. Open longs if the USD yen overpass this, it's very straight line. Otherwise, I will not be comfortable with longs in this pair. And shorts if the price respects this resistance where the price is right now, more or less this area.
If you get sell signals, you already have projections for downside potential?
Yeah. For example, in USD yen, the swing can be on until here, to the support.
All the way back down to the triangle. Yeah.
But I will combine it with Fibonacci. If it does it, for example, I will throw a Fibonacci here.
Yeah, I'm looking for 61.8, which is about, I don't know, 106.80. Oh, I see. You're doing fibs on that wave. Okay.
Yeah. For example, if the price do it like this, for example, my
I'm doing fibs from the low at 104.70 and the high at 110.30, whatever. Yeah.
Yeah. The key is to project all the previous fall from the point when rejects the price. You take this, this fall, and then you project it from here or from here, from where it rejects. Okay, that's how I can get the projections.
Okay, and those vertical boxes are, they measure a range, and then it's almost like adding or subtracting that range to get the next move or target. Is that correct?
Maybe. I'm not sure about it. Right now, I'm not sure about anything because I've been stopped out twice.
Well, I'm just saying your vertical boxes measure a range, and then it seems like when it takes out that range, you just add or subtract that vertical box for the next target. Maybe that's right.
That's it.
Maybe? Okay. All right. You'll only give me a maybe.
If the price does it.
I'm not going to call you queen anymore. Go ahead.
Okay.
All right. See? All right.
Okay. And last times we saw different pairs of Forex, and I think we never talked about the Swiss franc.
Yeah.
which is a European coin, and it goes, the movements are similar to the euro, but there are differences because the Swiss franc is very intervened by the Swiss bank, and the movements are more controlled. But now I think I have here interesting figures with this pair, the USD, the dollar against the Swiss franc. We have here a bullish divergence. Normally, after a bullish divergence, I like to combine it with that Fibonacci I told you. But this time, I'm going to draw here. This time, the price didn't bounce in Fibonacci levels, and it made
double bottom,
like a double bottom. Yes.
Yeah.
And this is the projection of the double bottom. I think the price can make a change in the trend. It's consolidating here. It's a great support here. The bullish divergence can be seen in daily chart also. And the projection will be
around
more or less in 2000 simple moving average over here, which is a great resistance. 0.987, more or less. The movement is about 100 pips, so it's a good swing. And by correlation, we have the other figure, the Swiss franc versus the yen. And if the Swiss franc goes down, the pairs against Swiss franc goes up. So we had USD Swiss franc going up. Now we have the Swiss franc against yen pattern, a wolf wave. This is a bearish wolf wave that is bearish. So I have
so
here
it completed that was a completed wolf wave count up there.
Yeah, and if I combine it with Fibonacci, now yes, I can do it because the price has the low. We have the Fibonacci projection over here, more or less. So this is another swing, and we can take partial benefits. This is bigger. This is almost 400 pips. So we can take partial benefits in all this path. And if the price goes up and make lower highs below 0.5, it's again good for shorts. Okay.
Okay. Nice look.
And the euro dollar, I saw your colleague talk about it. I have here the weekly chart.
Okay.
Okay. And this for me is the most important thing. The 50 exponential moving average in weekly has rejected, and now these are the two targets of the bearish wolf wave. This is a huge bearish wolf wave if completed, and normally when the price reaches target 2, it's a good point to have a bounce. It has made it, but it doesn't break the exponential moving average. So maybe this area, the 0.5 in this wolf wave, is very strong, and maybe it may
hold
like a double top. Again, we have to expect. We have to wait for the price reaction in this area.
Okay, what's that low? 108.50 or something?
1 second.
Yeah, it's a previous
1.87, like more or less.
Okay.
More or less.
So maybe a little stop hunt under that low.
Yeah,
possible.
Maybe
it's hard for me to believe
shadow
they're not
can overpass it.
Yeah.
But the bodies have to be up on this level to make a double bottom.
Okay.
And that's what I have for you.
All right. Well, now's a good
right now.
Okay. Well, now's a good time to show how people could continue to follow you after hearing you for 20 minutes and want to hear you for the next 20 years. How did they do that?
Okay, this is my Twitter.
Because see, I'm already predicting your longevity in the
Algorithmics.
business.
Yeah.
You might be
Kingdom,
around
the
longer
language.
than the markets are open.
No, I don't think so.
Yeah, that's your nightmare.
I think the markets will be open
Forever?
more than I live.
Okay,
More
good.
time.
Because people need to go through what we went through. Future generations have to go through what we've gone through. I think it's very good training for life. So, okay, there you go. There's Alba. You could follow her on Twitter. There's her handle. And you have, you also have a website too, don't you, or a blog spot?
Yes, I have several websites because one is my blog and my two blogs. One is about the wolf waves.
Okay.
The other is like more analysis and some articles about, in general, about trading and stocks and all and everything. And my project is that it's a trading room, but they are all in Spanish. I'm going to put it here. It's Sala para Traders.
What's a translation, Sarah Paula?
Trading room, like trading room.
Okay. Community.
Room for traders. It's a community. Yeah. We share in real time our trades and views of the market. We make also directs and everything. They have material to study and everything.
Okay.
It has to post, but they are in Spanish also only.
Okay.
So if anyone interesting, just ask me.
All right.
And that's everything.
Okay. You are everything, Alba.
Thank
you. So really appreciate your time today. You know,
it's a pleasure always.
I root for you, Alba, and I hope that 2020 is your best year in the markets and in every other area of your life.
Thank you very much, Dave. Same for you.
Thank you. So everyone, that's Alba.
Thanks.
Follow her at Albitamix and check out her wolf waves. Maybe she'll mentor me one day on this stuff. And except, you know, it's hard to teach.
Indenia. When you come to Spain.
Yeah, when I come to Spain, although it's hard to teach an old dog new tricks. But appreciate her being with us, and we'll see everyone for Turnaround Tuesday. Alba gave you some great looks on Swiss yen and the Swiss and potential in the S&Ps, and we'll see how things unfold in the days and weeks ahead. Remember, everyone, don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. Good hunting this week, Alba. Thank you again for being with us.
Thank you, Dave. Thanks.
All right. Adios.
Bye.
Bye-bye.